afternoon and welcome to BizTech's Asian Midday Market Watch, presented by the Smart Investor Singapore. It's Tuesday, the 22nd of November, and we have Jessica Amir, market strategist at Saxo Capital Markets. Jessica, good afternoon.
Hi, good afternoon, Brian.
Now, Jess, let's take a look at how markets have performed in the first half of the day. Now, what's happening right now? What are the key concerns?
Well, I guess there's a fair bit of concerns that have picked up, Brian. So firstly, in Asia, we've got COVID cases spiking. So there's a province near Beijing, and they've just reintroduced lockdowns. So universities have been shut, schools have been closed as well, and authorities there have urged people to work from home for 5 days. So I guess the overall undertone now is there's a lot of caution in the air that China could backflip and increase their restrictions collectively because overall cases are spiking again. And then the second thing that that markets are on tenterhooks for is the FOMC meeting minutes. So this will likely map out the Fed's thinking on how high rates could go, and this could potentially take the top off markets again. So I guess for those two overall reasons, markets are trading pretty cautiously at the moment. But all in all, in commodities, there's a lot of money being taken off the table on fears that lockdowns could increase again.
Now, looking ahead this week, what are some key data points we should be watching out for, and also events that could move markets? Because obviously the US is going on a long weekend because of Thanksgiving, so that's going to have a dampener on trading throughout the end of the week.
Yeah, absolutely. So tonight in the US, we're going to hear from more Fed speakers, Brian. So we know that last week when we saw several Fed speakers come out, they provided, I guess, hawkish commentary, and this is why markets took a haircut and went on the back foot. So if we do see more hawkish undertones tonight from the Fed, then markets will probably likely take another haircut. But of course, the big news item this week is ahead of Thanksgiving holiday on Thursday. It's the FOMC meeting minutes on Wednesday. But more broadly, I think the undertone is that peak hawkishness is behind us. This has been our thinking at Saxo. What does that mean? That means that the Fed is probably not going to get any more hawkish from here, and that is why markets are pricing in a potential recovery. So we've seen the S&P 500 and the Nasdaq rise in the order of 10 and 9% off their lows. We've got Asian markets rallying up about 20%, excluding yesterday and today's. That actually includes yesterday and today's haircut. But more or less, I guess the thinking is that the Fed could potentially be on the third week of December, could potentially be making a smaller than expected hike. And this would mean that markets may likely continue their slow grind higher. We could potentially see a Christmas rally, given it's the first time in years that we've got a lot of restrictions easing, excluding China. So more or less, where to from here? Just going back to answering your question, the next catalysts are in the first and second week of December. CPI data, jobs data out. They're probably going to be the next things that'll move markets. So we're watching those.
Now, how about in FX markets, particularly in Australia and the rest of Asia, because we've had a strengthening of the US dollar against major Asian currencies?
Yeah, good point. So the Aussie dollar is on the back foot. So as you said, the US dollar is again picking up the pace. It's seen as the store of wealth in times of uncertainty with COVID cases in China rising. That means we could potentially be seeing more upside ahead for the USD, and inversely the Aussie dollar. If you do believe, like us, that if there could potentially be increased restrictions in China, then that means that the market will be toying with the idea that commodity demand and AUD demand will fall. And then, of course, later this week, tomorrow, in fact, we've got the Reserve Bank of New Zealand expected to hike rates by 0.75%. So this means that you've got the Reserve Bank of New Zealand rising more than the Aussie bank, the RBA. So we're likely to see more downside in the AUD/NZD. So this is something that we're watching closely, given the Reserve Bank can hike much more aggressively than the RBA can. And that supports more downside theoretically for that currency pair. So that's something we're watching as well.
Now, Jessica, as always, great to have you on your show, and thank you very much for your insights.
Thank you so much, Brian. Have a great day.
Now, we've been speaking to Jessica Amir, market strategist at Saxo Capital Markets, on BizStack's Asian Midday Market Watch, presented by the Smart Investor Singapore. I'm Brian Fernandez. This video and podcast will be on our website, as well as our social media platforms, and the syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.